But first to China.
Legendary! Double kill!
That's a hugely popular online game, Honor of Kings, that was the target of an extraordinary attack by a Chinese state-run publication. Economic Information Daily said many teenagers had become addicted to this and other games, and it was having a negative impact on them. The news outlet warned that young people were playing for 8 hours a day and likened online games to spiritual opium, which could destroy a generation. Shares in the huge tech firm Tencent, which makes Honor of Kings, plunged, wiping billions off its value. In a moment we'll find out how this is part of a pattern of attacks by the Chinese authorities on a number of tech sectors. But first, what are people saying on social media in China about games and their effects on the young? The BBC's Kerry Allen has been monitoring the conversations. I asked whether people had been angry.
Yes, and people were really surprised that this was an argument between a state newspaper and Tencent, which is one of the biggest companies in China, and its owner is one of the richest men and one of the most influential people in China. There was a lot of surprise. From parents, it was a good idea that gaming was going to be cracked down on because you get newspapers and state broadcasters talking about the health impact of children spending a lot of time on computer games, high rates of eyesight problems and insomnia now in China from people sitting up late on their phones, especially during a COVID-19 era when people are spending more time on mobile devices. But from the actual gamers themselves, they're actually very frustrated about this because it's a way of relaxing. And Tencent, which is, you don't really have the domination of companies like Steam in China, the kind of platforms where people can play lots of different games. It's very much dominated by domestic companies like Tencent and NetEase. They basically setting rules now that minors can only play games for an hour a day, and if they're playing after 10 o'clock at night, facial recognition is going to check whether they're over 18. There's a lot of frustration about this for people feeling that they can't relax, that anything they do is going to be monitored. So yeah, there's the parents are quite annoyed, but the actual gamers themselves are furious about this.
Are they really expressing that anger on social media? Do they feel free to do that?
Yeah, they do, yes. It's obviously in China you've got a situation where state media is dominant, and this one newspaper, Economic Information Daily, described gaming as spiritual opium, which you do see state media sometimes kind of draw on historical terms or make people think of history. So this would have made people think, gosh, this is as serious to the government as the Opium Wars. And, that really hits a tone with people. But at the same time, gaming is massive and a growing industry as well. Previously, you've seen the government promote e-gaming as a way that young Chinese people can move into and make a fortune. And now people are being told, well, there are health problems associated with this and people are getting addicted. Don't, basically.
The BBC's Kerry Allen. Now, this is just the latest episode in a crackdown on a wide variety of China's tech industries by the government and regulators. So, what's going on? I put it to The Economist and leading China analyst George Magnus that it was extraordinary that companies that appeared to be crucial to the country's success should come under attack.
Yes, this is a curious phenomenon, Rory, and we can kind of date it basically to last November when the government abruptly cancelled what would have been the largest ever initial public offering by a company on the New York Stock Exchange and in Hong Kong by Ant Financial, the offshoot of Alibaba. And of course that was the prelude to the kind of neutering really of Ant Financial and the orchestrated deposition of Jack Ma, Alibaba's celebrity founder. After that, they passed the data privacy law, they passed a cybersecurity law. We've seen this kind of string of actions now which have affected DD Global after the IPO there recently, and then Meituan, the food delivery company.
The online education sector has been savaged.
Tencent, and so logistics, AI, tech, quasi-finance, video streaming, gaming. I mean, a lot of these things have now fallen into the crosshairs of the regulators. Each case on its own has its own story to tell about antitrust, protection of consumers, data privacy, inequality, which was the big beef about the private tutoring. Xi Jinping has this kind of social goals agenda, which is about campaigning against markets and companies that propagate inequality or kind of economic frivolity. But behind it all, you have to think really that it's a big orchestrated political campaign about control, regulatory control and political control.
Is this a sea change in any way, though? Because for years they seemed to be happy, the Chinese authorities, that some people would become, to coin a phrase, absolutely filthy rich, as long as it was good for China. And now they seem uncomfortable with that. They seem uncomfortable with too many people putting their heads above the parapet. It seems a bit of a U-turn. Is it not?
Well, yes. I mean, at least up until now, or let's say the last year or two, China's private sector and its private entrepreneurs were given a pretty decent kind of headroom to experiment and grow their companies and innovate and do things that have made them into, in some cases, world leaders, in some cases, very feisty global competitors. But I think this is a change of attitude, and it kind of raises a very kind of dialectic contradiction, which is very familiar to kind of a Leninist state, because all of these digital companies, you cannot imagine that China doesn't believe that they will be instrumental in shaping the world in China's interests in the future. But they cannot help themselves but bring them under much greater regulatory and political control because they don't like the implications of unfettered growth. So in a regulatory sense, China's starting to treat many of these companies a little bit like utility companies or, state-controlled enterprises. And that's really not very encouraging, really, if you, particularly as an investor, but even from a kind of a general point of view, if you're looking at this sector and, new digital companies, venture capital and startups, if you're looking here for the kind of the future and cutting edge of kind of economic and technological change in the future, but you actually are taking action to stifle these companies and keep them kind of reined in, there's a contradiction there between obviously markets and politics. And, one imagines the politics are going to win.
George Magnus, the economist and author of Red Flags. Jane Wakefield, what's interesting here is the Chinese seem more determined to regulate their tech companies even than the Americans.
Yeah, I mean, I think we've seen across the world in the last couple of years, regulators really trying to clamp down on big tech and really starting to question what they're doing. But I think you have to kind of come at it from the perspective of what is it that ultimately they want to achieve. And in the West, the regulators are very much looking to put sort of more power in the hands of consumers, whereas I think in China, it's much more about government control.
Yeah, they certainly don't want to stymie their companies, do they, in the long run, because it is a vital weapon in their sort of trade war with the United States.
It is a delicate balance, isn't it? But I think they're also very aware that these companies now have global reach, and that means that their control over them is becoming more limited. So they're going to have to walk a very careful tightrope, aren't they, of making sure they continue to be successful, but they regulate them in the way that they see fit.